Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money, ideally, on the internet. Loaded up for discussion today. We've got Bitcoin dipping to 102K before bounce back to 104. Got hyperliquid competitor Lighter announcing a $68 million raise from Founders Fund at a $1.5 billion FDV. That'll be interesting to discuss. And finally, touched on it very, very briefly at the end of the show yesterday because it was breaking news, but SoftBank sold its entire Nvidia stake for 5.8 billion. Definitely want to touch on that at some point today, discussing the kind of AI trade, the AI bubble, and what that means for the rest of the markets and our investments. So we've got the latest on price action on everything else as well, plus a general discussion too. So stay tuned for that. Delighted to say I've got Legendary and Bread in the co-host seats with me today. We're ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is always quite risky. So we don't know anything for sure. Please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Wednesday. It's the 12th of November. How are you doing? How are you feeling?
GM Jim, doing quite well. Excited to kind of continue the conversation which we had before the show on portfolios, on where you see volatility going, on whether we are entering a crypto bear or not, and what's like if our positioning, which is to do less than we are used to do, is still the right one. So did chat a bit about that. And typically you and I we do a portfolio chats, I'd say once a week, maybe once every other week, sometimes if we skip one. But feels like because you had so much going on, I had so much going on, we didn't have a proper portfolio chat privately in quite a while. Neither did we have one on the show to the extent that we sometimes did them in the past. So excited to have a bit of that conversation around the first headline when we get to it.
You know why that is though, Legendary. You know that our behavior often is a direct consequence of our feeling in the market, whether like subconscious or conscious. And if the market required us to be having a conversation every few days, even if we were busy, we would somehow find a way, I think.
Yeah, that's fair.
Whereas the market just does not require us to check, like, right, are you still holding your Bitcoin? We've gone from 106 to 104 to 108 to 105 to 107 to 103. Like, what are we doing? Like, we don't need to discuss that necessarily. Sure, there was a Zcash trade which absolutely ripped, but beyond that, like, I just don't think we've been compelled to have that conversation, which is interesting. But I agree with you. I still want to have it with you. One interesting question, just to come right in with it, Ledge. Brad, I see you chuckling at something, so I'm gonna have to pause and come to you here, Brad. What's on your mind?
You guys are hanging out on a different side of the modern market chat than I am, is what I can tell. I woke up having to check positions because I'm playing with the boys. I got a couple things running. Arrow's got an announcement coming out today. It was up. I had some take profits, pumps back in the green. Man, I got we're dancing in the chat, and like, yes, it requires maintenance. So we're talking, we're planning. The market is moving if you're looking for it.
What's the time frame on these positions, Brad? I know ultimately you end up being a long-term holder regardless, but the fact that you're needing to monitoring them on a day-to-day basis,
we call
these
it
are like
community
the
member,
fast-moving things, right?
Yeah. Well, listen. Yeah, I try to avoid being a community member. I've done it on a few occasions with some of these scalp plays, but not
just a community member, but you're a community perp member.
Correct. Yes.
So
correct.
it's like one step
community
removed
member
from
by
the
proxy.
community. Yeah.
Yeah. So yeah, I mean, most of them are short-term things. Like, I know the entire chat jumped on the uni trade. We nailed that thing. At one point I was
asleep
up 200%.
for that. That was a good one.
Yep, nailed it. I held it a little longer than I wanted to, especially with everything just turning bearish overnight. That kind of sucked. I did the exact same thing. Dude, I was up 200%. What the hell am I doing holding on to this thing? It's like, just cash it in, go move on. But I did the seeing these other numbers, maybe I can do whatever. So I still closed it in profit, and then we all rotated over to Arrow, which I already hit my take profit this morning. Didn't even wake up how to do anything. So we're playing the game. But yeah, they're all short term. Like, and again, for everyone else in the crowd, I'm not swing trading my entire bag. Like 60% of my net worth is in stocks or just doing its thing, which, by the way, some of that's getting murdered We won't talk about it though. And then, yeah, this is a small portion just to stay on top of the market, force myself to, I don't know, stay in tune.
Love it. Really important point, because obviously this is one way to attack it, right? When the market is doing less than it was maybe previously, there's always pockets of activity if you can identify them. And especially if the market is not giving you the volatility you want, now that everyone is becoming far more proficient with perps, like you can create the amount of leverage that you want to have and try to have the gains that you want to see if the market's not like naturally giving it to you.
Be the leverage you want to see in the world. D-check.
Indeed. Legendary, what do you think of this statement of being the leverage that you want to see in the world? And actually, just go for that first, and then I've got one more question for you before we kick things off.
Yeah, when Brett said that, I wanted to interrupt as well, saying be the volatility you want to see. So I agree.
There you go. Yeah, there you go. The question I wanted to ask, Ledge, before we get into the main stuff, maybe this will bleed over into the main conversation today, is you said, we were talking before in the show, and I was saying, I don't think people like crypto. Young people don't like crypto. When you think about the next set of buyers and you're thinking about crypto versus all the other things that it's underperforming right now. I mean, someone shared the other day, like random internet hard drive stocks at 2 to 3x. That's so forget AI, which has outperformed everything, and just even the Mag 7 and the S&P ripping. I mean, even gold is outperforming, I think, at the moment. You have, my concern for crypto is that, yes, it's captured the imagination of the administration and our generation, which has maybe made some money off it, but it's burnt a lot of people along the way. And I'm not entirely certain that the younger generation like it. Your response was interesting, because you're like, well, you don't need to like it, do you? Like, does anyone like the S&P? You like it because it goes up. Does anyone like having an index? I don't know. What was your thought there?
Yeah, I mean, S&P, maybe because I'm not American, but like even, extrapolating, go MSCI World or MSCI All Country World, just the global index, mirroring everything that's happening on global stock markets, doing it's like 7-ish% a year on average over the last couple of decades, that is. I'm not particularly emotional about it. I don't like it or dislike it, yet it is the majority of my stock portfolio. And I feel like it is okay like that. I don't have to be passionate about that. And I feel that's also a good state. I feel that Whale has made the point on the timeline, basically criticizing that Aaron's like praying for mass adoption, people flocking into CT, etc., etc. He was making the point, if people get too excited about it, if people like actually start to come in and actively participate in Web3, not just using blockchain technology in the background because whatever payment provider chooses to route transactions via public ledger, then our competitive advantage goes away. Asymmetry goes down. Opportunities that we see are going down. I feel like we'll see some of that probably play out when we will be able to compare the Monad public sale versus the Mega ETH public sale, where like Mega was clearly catered more to core CT, to people either like having good on-chain history or having been supportive of Mega, or having made the commitment to lock up for a year and still having either like social influence or still good on-chain history that was speaking in their favor. Whereas like Coinbase with the Monad sale is catered to, well, the Coinbase users, to the millions of them, to people using Coinbase One, so like a way wider audience. It doesn't feel like that as a CT member, as like core crypto Web3 native, however you want to call yourself, you will have an edge there because it's a way wider audience. So I kind of like that people don't like crypto at large, because that keeps it more asymmetrical for the people already participating in there.
I think you're right.
100% against what he's like, bro. Like, you can always, like, there's always going to be edge. Like it'll never be neutral. If you're in the nexus of information, like the very genesis of all this shit is crypto Twitter. So like, there will always be edge to be had there by the people who are closest to the information. And that is not unique to crypto. That is literally all markets. The closest you are to the genesis of information is like the more opportunity that you have if you were able to like opt or to act on the information. That's in traditional markets, that's in crypto, that's in whatever. This place, like, so whether people are participating in the ecosystem broadly versus like whether they're here on CT does not fucking matter. Like if you're here, you're gonna have edge, and there's gonna be plenty of stuff to do, and like that's just always gonna be the case for literally forever.
Yeah,
I don't know. Like, I don't know. I don't think I agree with that fully. Like, yes, there's always going to be edge, but I would say that it's way more difficult to have a significant edge in the stock market than it is to have an edge in crypto, and that is due to this market being less regulated and smaller in my view.
For sure. But like, bro, I had edge on GameStop because I hung out on Wall Street bets. Like regardless of market size, like being as close as you can to like the beginning of something to sense it is always going to have edge. So like I would say that same thing is going to hold true here, even if this thing goes to a global market and everyone's doing it, it's more regulated, all that shit. Sure. But because it's permissionless and anyone can participate at any level, I feel like you're always going to be able to step in front of something. You're always going to be able to find something here. I truly believe that.
Maybe in the maybe the slightly, maybe it's not an analogy, but in the same way that we now can't influence Bitcoin, for example, I'm sure at one point crypto Twitter could actually influence Bitcoin, for example, whereas now that's like too big. It's an ETF product. It's got bigger, and then you find newer pockets which emerge over time. Perps have exploded this cycle specifically, and you had to be locked in this cycle to catch hyperliquid, to be early to lighter, maybe, which we're actually going to talk about today. And then maybe now there's too many perps. Now everyone's trying to farm. God, I can't even remember all the names of all the different perps ones.
Lighter?
Is it variational? Some other ones. There's going to be more, I suspect, and everyone's going to think, because of course, is this going to be the next hyperliquid? You kind of get in that doom loop as one thing becomes valuable. There's a bunch of copycats, but then there will be a net new other thing at some point, I guess, is your point, Brad. So I think, yeah, there's some merit in both of what you're saying there. But look, let's get into the main stuff. Talking of lighter, we'll get into the perps conversation in a little bit. But we also got some other interesting stuff to discuss too. But let's start with the price action as usual to get you up to speed with everything that you need to know on the price side and the news side. So Bitcoin is flat, more or less, back to 105. Seems like it's got back all of everything that it lost overnight. Back to 105, dipped as low as 102 for a bit. ETH is almost flat as well, around 3.5K. XRP is down 1% to $2.44. BNB is down 1% to $971. Sol is down 2% to $160. Hyperliquid is flat at around $40, holding strong there. And SUI is down 1% to $2.07. Sounds low for SUI. That seems to have underperformed for a little bit here. On the meme coin side of things, Doge is down 1%. Pump is actually up a couple of percent. We've got Pengu down 2%. SPX is up 1%. Tibber, which is by virtuals, up 16%. That's up 30% in the week. That's doing particularly well. Fartcoin's up 1% as well, up 20% on the week. And we also have Rex down 6%. So that's what's going on the price side of things. Remember, the headlines we'll talk about today is Bitcoin dipping to 102 before bouncing back. Led will do a bit of a general market roundup in a bit. We've got hyperliquid competitor Lighter announcing $68 million raise from Founders Fund at a 1.5 bill FDV. We'll discuss that. And SoftBank sold their entire Nvidia stake for $5.8 billion. We'll consider what that means for the rest of our investments, the AI bubble, the AI market, and everything else. Notable price action: Zcash down to $475 when I last checked. Meteora surged up 28% to 50 cents. AS is up 8% as well to $1.16. And Canton, we spoke about this the other day as well. This kind of new blockchain, very, very focused on institutional capital only, up 17% to a 4.6 bill FTV. I'm pretty sure this has bypassed almost all of crypto Twitter. But if you're paying attention, that's been they've attracted a lot of institutional capital. So that's something to note. On the sales side, had a CryptoPunk VR sell for 44 ETH. And in general, on the rest of the NFT market, you've got Milady's up 5%. Everything else is mostly flat. One thing to note, Infinex patrons are up almost 8% back to a 1.6 ETH floor. That's on the back of a very interesting article written by founder Kane, which if you are in any way involved in Infinex or looking for a TGE with a decent product behind it, very interesting article outlining the march to TGE and the various ways that you can participate and get exposure to the Infinex token, which will be coming out as part of that. So I'd recommend having a read. Obviously, I've invested in Infinex a long time ago. I've de-risked a bit, got continuous exposure there. I think it's a decent product. Specifically, actually, while we're on the topic, I believe they've been working, this is the point they make in the article, they've been working with Mega ETH, Monad, and Fogo, I think is the third chain, which I was less familiar with, so that their launch partners with the chain in the sense that they're going to, when you want to swap tokens between all of these different chains, you'll be able to do that via Infinex. So I think that's important to know. I'll check with Brett if that's accurate in just a second. Just getting to the rest of the roundup to get you up to speed with the rest. XRP ETF to launch tomorrow via Canary funds. I think that'll be important to watch to see how much demand there is for another big coin in the ETFs. Monad revealed their market maker details in Coinbase documentation. Thought that was pretty interesting. The only one who's done that before was, gosh, I can't remember, but I think the Wintermute founder replied and said who it was in one of the comments. Purple, the main DEX on Monad, launched its testnet and opened private beta for 250 users. Injective launched its EVM mainnet. A16Z note that as crypto reaches more mainstream users, the need for privacy is more urgent. Plasma announced a partnership with Daylight Energy. This one was pretty cool, which is going to be a stable coin with yields derived from energy revenues. I thought that was pretty interesting. Would be curious to find out what that yield will be. And then finally, Moonbirds announced that 200 million McBurbs were ordered with almost 2,500 unique holders. They're doing all kinds of activations at the moment, selling a lot, getting a lot of activity, I suspect, in preparation for their own token at some point soon. So that's the roundup to get you up to speed with everything that you need to know before we get into the main stuff, the main headlines. Brett, curious to come to you first there. If I've got that right on Infinex, in the article, they detailed how they've all of these kind of new chains that are coming out that people will be expected to be using a lot. You'll be able to switch between them. They call it switching. So going from one token on one chain to another token on another chain in a very seamless way. Is that accurate? Is that fair? That's what it said in the article.
Yeah, I mean, it's permissionless, so they can do whatever they want. but yeah, we're friendly with Kane. He's investing in a lot of our early applications. He's been a part of the Mafia and stuff. So he's got really close ties to the ecosystem, and because of that, he's interested in making sure that they're supported early and often. So, yep, for us, yeah, it's just strong ties.
Get it. Makes sense. And by the way, if you haven't, like, Infinex is because the thing that happened when a lot of our funds moved off Solana into Hyperliquid. Now, if there's anything on Solana, I'm kind of screwed. I'm like, oh, I don't really have any funds there anymore. Having some funds in my Infinex account is always kind of helpful because it means that I can. But then the thing is, I need to make sure I always have funds in the Infinex account, and sometimes I've taken it off there as well. So it is a super helpful place to go and do various things. So I like it for that.
Do you think it's better or worse? It's like there's a gift and a curse of having your stuff compartmentalized, right?
Yeah,
like,
exactly.
Having all my stuff, like I have a Solana bag, and it's like if I run this thing to zero, like my Solana experiment has run its course, and like I'll move on. I fear having like a multi-chain bag that like I'll just chop myself up. Basically, it's like, oh, I'm going from Solana to Base, and then going from Base to Hyperliquid. So like it almost helps myself mentally to have it compartmentalized, and there'd be a little bit of a friction between moving the environments.
I know exactly what you mean because the way that I actually internally track my portfolios, well, I say portfolios, right? But I divide them into like Solana 1, Solana 2, Solana 3, yeah. ETH1, ETH2, ETH3, ETH4, ETH5. So like
it's a security thing too, right?
Yeah, I think it's a little bit of that. You definitely don't want all of it in your multi-chain one, get exposed to everything at the same time. So yeah, curious, Ledge, what do you think there? Is it actually helpful to split it up a little bit, not go have it all compartmentalized, or what do you think?
My compartmentalizing works in a different way, like, because for me, as someone who loves the button clicking, the friction is not noticeable if I move between Solana and mainnet. Like, use Relay, use Project X, it takes you less than a minute to move across, especially if you go L2 to Solana. It's like basically within 10 to 12 seconds that you have your funds ready to go. What I do, however, is that I don't have all of my funds accessible from home. I think I said that multiple times on the show. And even from a security perspective, I have just ledgers which are ready set up, but they're in a vault far away from my home. And that also makes sure that I can't access all of the funds. And that is, like, for me, creating this helpful divide of like playing capital, or working capital, or degen capital, which I access from home, and then the long-term holds, which I could not even be tempted to, let's sell that one BTC to buy whichever shit on Solana, because I think this is the one, simply because I can't access these funds. So I think compartmentalizing is important. Crypto, do not think it's of everything as like your one bag, but how that works might look different for different people.
Makes sense. Okay. Want to bring Oxy into the conversation here. Welcome to the stage, my man. What are your thoughts on, is it Infinex, TGEs, anything else catching your attention before we go back to Ledge and see what's catching his attention?
Yeah, you were talking about Tibber being up, what was it, 16% or something?
Yes.
It's probably a nothing burger, but the CEO of Robinhood responded to a post from the Tibber AI agent from 8 months ago, basically saying, like, the Tibber agent said, we're trying to be bigger, or like our DEX is going to be bigger than Robinhood. And then just like yesterday or 2 days ago, maybe, he said, bring it on. And the post was 8 months ago, March 1st. It's just like, what the heck? So degen's doing degen, so I just want to add that context.
I mean, thank you for the context. I mean, it kind of makes no sense still, but what is the leap of imagination people are trying to make here, Oxy? Is it that Robinhood, I think I saw someone tweet something like, what, are Robinhood going to be involved with this agent in some way, potentially?
Like, whatever makes bags go up, you know what I mean? So I think, I don't know, people under was like, when Robinhood listing, I don't know, it's literally nothing, in my opinion.
It's like November 2025, when everyone's like waiting to see where Mark Andreessen is commenting on, like, which AI coin is he gracing with the presence of his comment. So rerunning that with different main characters.
Okay.
The thing I want to comment on is the Monad stuff with published market maker agreements. So the other company to do that was WorldCoin.
Yes, that's
WorldCoin was a bit more public about the thing that they did. They did disclose strike prices and some other things. I do think it's a good trend to see these agreements. It's also interesting, specifically with Monad, to see that Wintermute is the only one who is going for a 1-year agreement, 1-year loan with them, where the other 4 market makers, including GSR, go month to month. So they can extend on a month-to-month basis. We don't know the details as of strike prices, etc. But I do feel that this transparency is helpful, because probably the majority of people still don't really understand what a market maker does and how they work and what they do. But if you will have disclosures like that, being more public, being part of documentations, then people might get more educated about the market making aspect, which I think is an important one.
Yeah, I think that's fair. One thing, yes.
Talk to me about the Burbs thing. Do you think when are we getting that fucking token, first of all? Because like, we bought those boxes. Well, I'm Bastin now. We bought those boxes like 2 months ago now. I think we put a decent little chunk in there. I think I spent like 10 grand on these fucking things, and like
3x.
Are they still 3x?
I don't know if they're still 3x.
What
they definitely did at some point.
Last time when we had a show when there was like something Burb related in the roundup, you weren't with us, but Brett asked the same question, like, when's the token coming? Am I up or down? And I wasn't able to find these things on the spot on Solana.
So there's no details yet. Like, as in, obviously there is a token coming at some point, but there's definitely been no indication of when that'll be yet. So I am obviously an investor into Orange Cap, but I don't know.
But what
This
did we
reminds me.
buy? What was the name of the thingy? The boxes where we spent thousands of dollars.
Is that Collector Crypt, and it was
Collector
the like
Crypt.
Burbs.
No, it was
pack
a
six or
mystery
something
item.
like that.
It was a
Yeah.
mystery item.
Yeah, but I
This
want to
reminds me of.
So you
on-
don't know what you bought, and for the first time, Legendary, it's actually appropriate that you don't know. Like usually you should know, but this is actually a
I don't know,
mystery.
but I just want to find it on the collection on Magic Eden or wherever.
You have to do like
Yeah.
a type and filter by like Moonbirds 6 or Moonbirds 12 or whatever
You
it
can
is.
just go in with your wallet and
I haven't, bro. I have 40 Solana wallets. I don't know. Go in with your wallet as if it were that simple. Do you think I have any idea with which wallet I bought that?
Go to Collector Crypt and search filter. It's like a by type, and it's Moonbirds 6 or Moonbirds 12. Like that's like
let's go via Collector Crypt. That's a good one.
But what this reminds me of is like the people degenning on Wall Street bets. Like we just bought options. We don't know what the fuck we bought, and then like you ultimately have to get delivery of like barrels of oil because like fuck, I didn't want I don't want the oil. I don't want these. I don't want to have 1,000 birds show up at my house. I don't want this shit, but I want the token.
yes, you do, Brad. Because what if you get the barrels of oil and you get the token at the same time? This is Gary V playbook over again. This is Gary V. I mean, by the way, we're just speculating here, right? I don't know what we bought ultimately, but this is Gary V making you buy 100 books, taking a bunch of boxes, sticking it in your garage, and then getting tokens, which you then sold for much more. And now you're stuck with 100 books. It's actually the same as wrecked drinks, having you buy 20 boxes or crates of drinks, and then you ending up getting a full refund, if not way, way more money back for buying it. But you've still got the drinks in your garage. So you've got a very full garage, Brad, but you've got a bunch of internet money as well. So that's what you signed up for.
Yeah, it is what I signed up for, and we'll see how it works out. Like
you're gonna have a lot of Moonbird socks or something.
Yeah.
Well, perfect time for the winter, maybe. Okay, so yeah, we don't know what the details are, but hopefully it's a nice little flutter we've made there. One final thing before we get into the headlines, I see this comment from Daryl, and I think it is a helpful one to touch on. Spoke about Uniswap buybacks yesterday. We thought that was meaningful. Obviously, Brad, you caught that trade as you caught that as soon as it came out, moved it into Aero. But what about Meteora? So Meteora is up 25%. Meteora has been probably, if you think about it, one of the most successful protocols of the cycle. Fairly, well, in some ways low key, because I don't feel like people talk about it that much because it's kind of complicated to do. So the average KOL can't discuss it in detail. But obviously very, very prominent in the sense that this is where a lot of the bundling and token selling was taking place like in the height of the Solana stuff. And I believe one of, if not more of the founders kind of got caught up in all of that. Like to what extent did people know about what was going on? So like very, very prominent, very, very highly used protocol, revenue generating. Ledge, I know you were using it a little bit. What do you think of this Meteora rise up 20 something % in the day? Obviously the TG was not very long ago. So I think maybe this is just a pure play on like, look, this is just undervalued versus what this protocol is. What's your reflection there?
Yeah, I think we're kind of trying to run this narrative back when back in the day, Brett was sharing charts and he was like, this is revenue on DeFi protocols on ETH. This is revenue on the Solana side of things. Hence, Solana is undervalued, or these Solana protocols, not Solana itself, is they are undervalued because on a revenue perspective, they should trade higher. And the market did not reprice to the full extent based on that revenue. And I feel like now that we had this fee switch proposal coming out of Uniswap, that now fee switches are back at the center of the DeFi discussion. And as a result of that, people are starting to do these comparisons again. And this time, the revenue which is being generated on Solana is even more significant, I feel like, than it was whenever that meta or discussion point first initiated. And we're seeing some of these repricing upwards.
Okay. Can we just check the FTV for Meteora? In fact, Oxy's hand is raised, so I know he's pretty deep in Meteora. So maybe he might be able to tell us, but if not, let's just get the valuation to see what we think. Oxy, your hand is raised. I know you're pretty deep on Meteora. Is this just purely Meteora being undervalued versus what it is, or what's the move here?
Yeah, I agree. I tend to think that way. ICO Beast did a nice post yesterday about the comparison between Uniswap and Meteora, and then Pump. So the FTV of Meteora is 550 million last I checked, I think. I don't know what Uniswap's sitting at, but he did a breakdown where it's like, okay, how many fees annualized does Uniswap generate, which is $2.7 billion. And then Meteora generates 1.2 billion. So roughly half of what Uniswap's generates. So, in theory, hypothetically, if the, quote unquote fee switch is turned on, it goes back into pumping into the Meteor ecosystem. Should it be half the FTV of Uniswap? That's the idea. I don't know what Uniswap's trading at right now. I think it's like 4 billion, if I remember right. Maybe more. I'll have to check that, but that's the idea. Yeah, generally.
Interesting. Thanks for that additional context. I like it. I like Meteor as a protocol. It's a proper protocol. It does proper things. It makes money, and so two things. One, I think it feels cheap here. Seeing now, Ledge, you're sharing it's 550 mil FDV, market cap around 270, but I wonder whether we're just in a market where pumps get sold into. And so I'm kind of looking at this with the perspective like, okay, fine, it looks cheap, but it also has just gone up 30% on the day or something, 20 something percent on the day. And then the gains have just been given up straight away. So not super confident in buying a 20% up day. I personally would not want to do that, but definitely thinking it's a strong protocol that is probably undervalued. Probably looking for a pullback if I was going to take a position. Thoughts there, Brad? I saw you just post in the Telegram chat that we missed this one. What's your reflection?
The gang's already on it right now. We're looking at some of these protocols. Radium looks like ass. Meteor has been running like crazy the last few days. I'm actually now looking over on DeFi Llama to see how some of these numbers actually stack up. I did if you were to forecast a Uniswap's proposal and back test it, right? It put it ahead of even Pump on actual revenue generated. Yeah, like on a monthly basis. But I think it was like 38 million versus.
Yeah,
like
we
Pump's
brought that
35.
tweet of yours up yesterday. We looked at that.
Yeah. So like looking at these numbers, like Meteor is, yes, impressive, but it all depends on what I'm learning is like some of the underlying mechanics, because Uniswaps is deceptive, right? Like you see Uniswaps like fees generating, like, oh shit, it generates a lot. I was like, yeah, but it all goes to LPs. So you need to understand how much of it actually goes to the token, how much of it actually goes to the users, how much of it actually goes to the whatever. And I don't have that intimate knowledge of Meteora. So sitting here just looking at the fees generated, it does stack up highly, top 10, it's good. But how much of that would actually be routed to the MET token, and how long would that take? How long is that narrative going to do stuff? And then relative to the actual market price of the token itself is the game to play right now.
That's a really important point. And as you can suspect, that's like a game that will trend lower and lower over time, right? As more and more dexes can get spun up, fees, they're going to have to be hyper competitive on fees. Yeah. And so, you can see how not a lot of that goes back to the token holder necessarily.
I mean, you say that, but like, so like, yes, that was the pushback with Uniswap's proposal, right? They're like, oh, they just changed the fees, therefore capital is going to fly. It's going to go somewhere else. It'll go to the place at zero. And I think we've seen pretty consistently time and again that that's not actually the case, right? Like if the fee change on Uniswap was 0.3% goes to LPs. Now they're making it 0.25% goes to LPs and 0.05% would go to Uniswap if the proposal passes. And like, is that enough to make capital fly from Uniswap? I don't know. Because like we still see roughly $50 million in front end fees for Uniswap. That is a totally additional, totally opt-in fee that people are paying. Same thing with like the swap fees you see on wallets, like on MetaMask, on Phantom. All of this shit is like the lazy tax that people are paying, and they're totally fine paying it. So it's hard for me to think that something as well established as a Uniswap and in the Solana ecosystem of Meteora is actually going to lose a lot of capital quickly whenever it's just got an established position. People just like do what they do, right?
Agree.
Yeah. Someone had a pretty good article or a very critical view on that. It was Jim, let me get it up on screen, saying that Uniswap's death spiral, a thread, how under extreme competitive pressure, Uniswap chose an exit pump rather than a graceful demise. And comparing it to Aerodrome, where Aerodrome is sending 100% of its revenue to token holders every week, rewards LPs with the same token, creates historical compensation, multiple LPs around 1.5x of weekly fees. And then going to how Uniswap is distributing fees. And even without giving dollars to token holders, Uniswap has lost to Aerodrome on base because of that LP multiple of 150% versus the 100%. And kind of making the point that this goes into quite a lot of depth, but kind of making the point that what happens when holders realize that they're being diluted by inflation, dumped on by labs, and only getting a smidge of the pie, that they will move somewhere else. Obviously, Jim is heavily biased towards Aerodrome, but that is the different view, the different perspective to look at that. And the one final thing I wanted to comment on the price action is that the interesting thing is like the weekly performance of Meteora up 55%. It's basically identical with Uniswap's weekly performance, which is up 57% over the week. So
interesting. That is interesting to know.
But you could have traded that because Uniswap did pump way higher, obviously, on the news, and the Meteora catch-up trade happened the day after. So there was a time and place to see what's happening to Uniswap and then rotate into Meteora, open the Meteora trade.
Fair. Yeah. Okay. Well, these are I like both of these trades because they're proper companies, and I feel like they're less speculative to that extent. Good stuff. Interesting to go down that route. I think definitely want to keep an eye on both of those and how they progress. Let's get into the main headlines for today, though. We've only got 18 minutes left of the show, so let's just get right into your majors roundup. What do we need to know here? Bitcoin being a bit, just the market's just chopping people up, I think, if they're on leverage. What do we need to know? What are you looking at?
Yes, absolutely. Headline being BTC did go down to 102K, did bounce back to 105K. I want to tackle it in a bit of a different way than the other roundups, which I've been doing, and kind of ask this question: what is happening with BTC's volatility? I think we did establish that BTC volatility did go down over time, but it feels like it's increasing now. And I kind of wanted to have some numbers to put all of this into perspective. To do that, I have two indices for Bitcoin volatility. This one is a historical one, which is basically looking at the estimate for the last 30 days in terms of BTC volatility. And what we can see is that volatility throughout the year for BTC over the last over the previous 30 days has been pretty low, has been like anywhere between 1.1, 1.4%, went even as low as sub 1%, 90 bips in October, but has spiked to 2% and is now like at 1.66%. So the average volatility over the previous 30 days right now sits at 1.6%, which is higher than it was in the previous months. However, it is significantly lower than the yearly averages, where you can basically see how this has been declining over time. And even in 2021 or 2020, that number was still 3 times higher. Now, obviously, you cannot make the point and say, okay, this is historical volatility, but what about forward-looking volatility? There is a forward-looking index as well that kind of tries to capture how volatility will evolve over the next 30 days. And this index is basically painting a very, very similar story, saying that volatility throughout the year has been rather low, but now has been increasing. So depending on the time frame, basically both things are correct to say. BTC volatility is down massively compared over the years, but this year specifically compared to the last months, it has been climbing a bit. So that on the BTC side of things. Taking also a look as part of this roundup at some other things, including gold. Gold is up, has been up yesterday, is up again today, up another 0.6% at $4,134. And then also taking a look at the stock market. The stock market is looking a bit mixed. You have stuff like Nvidia. We'll have a news on that later in the show, being down 3%. You have Apple and other tech stocks being up 2% for Apple, Microsoft being up 0.5%. What is really outstanding, other than just going through those individual stocks and titles, is the healthcare sector, which is massively, massively green across the board. It is the sector where we can see a fair amount of appreciation right now. And the last point that I want to tackle, that's more on the macro side, is go away. On Polymarket, the Fed decision in December, market with 76 mil in volume, is up over the day. The chance of the 25 bips decrease yesterday was lower, was at 68%. Now it's up 4%, back to 72%. So it seems like we're getting closer to the end of the shutdown, which Polymarket is now expecting for the 14th of November. Covered that, the bills have been signed, etc. So it seems like as this is getting closer, also the chances that we're going to see another rate cut are increasing on Polymarket as well.
Good stuff. Very, very interesting, spanning a few things. I'm glad you touched on just the potential interest rate decline again. Looking forward to the December meeting. I am still of the opinion that all of this stuff has been pre-telegraphed too aggressively, and we are going to need to be far more patient. A reminder that we are 1 year into the Trump presidency. It's still November. I feel like I've been talking about this a little bit more recently. Like, if you just reflect, 1 year into, well, Trump's inauguration was back in Jan. Like, it's been an insane year, insane activity, both to the downside with tariffs and then a violent move back up, erasing any of the losses that might have taken place during the tariff fiasco. And I just think might have to be a bit patient here. I don't think this market is going to rip for 4 years straight because it is Trump. And I think you're going to have to work through a few things here before maybe later. Doesn't necessarily mean we tank either. It might just mean you've got to chop around. And I think that's what people are doing. People are inventing the volatility that they want via perps instead. And, you've got to be super careful with that. And I think sentiment reflects that. They're not getting the volatility they want from the markets. They're having to create it themselves. And sometimes that is not going well. So if you were predominantly in spot Bitcoin and with some other assets, like, you're probably still completely fine here, depending, hoping that you didn't buy 125K. But that's my general perspective, is to be patient. I just don't think you need to press a hell of a lot of buttons in the last few weeks, nor now. And I'm waiting for signs to think that we do need to. And I specifically do not think that, the Fed reducing by another 0.25 in December is the catalyst to, right, now we're going to do things. Like, this is it's too telegraphed. So we're going to need more in general. Appreciate your thoughts there. Let's want to circle back to you. Just want to touch on with Brad first. If you have any thoughts on this, what do you think about this? I'm kind of preaching patience here, Brad. What do you think?
My default position is patience, so I don't really actually honestly give a shit. And that's in like my major positions. So my general feeling, I think I've expressed it the last few, I would say, weeks, is I think we're up into the right on most of this stuff. It's like, I'm fine. I'm okay being patient. I see structural stuff that allows us to just do whatever. So all of my core positions are measured in months. I'm not moving them. And then I have a small amount of stuff that I'm degenning with the chat, and that stuff is days. So for me, this time range that everyone is worrying about, which is like weeks and or thing over,
that's not your time
at all. Yeah,
it's a time frame thing. I agree.
I'm literally worried about 3 hours from now more than I'm worried about 72 hours from now.
Sure. Okay. Ledge, coming back to you here. Final take before we move into the next headline.
Yeah, serious answer would be that, as much as like the button clicking and as much as I miss it right now, majority of my portfolio is in longer term positions and not in the short term button clicking. But I do worry about that, and I love it. And I am not a patient person, so I want the button clicking back because it's just a fun thing to do. But I agree with you that for the majority of the portfolio, patience is probably the right approach.
Yeah. Okay. Well, that's our perspective right now. we're obviously exceptionally well placed to know when the moment turns. I think we've done that quite well back in January when we decided we got to go. So actually back in November, December last year when we decided we had to go, back in January when we said, right, we got to stop here. Things have gone too crazy. And then for the little bit of mania we had over the summer, I think we participated quite nicely and then said, look, we got to press the pause button here again. So yeah, we'll keep on top of that. Next headline is lighter. We're going to talk lighter, then we're going to talk, Brett's going to take us through the stock market stuff and some of the Nvidia moves that are important to know. But first, I'll just take you through the lighter news. Lighter announced a $68 million raise from Founders Fund at a 1.5 bill FDV. This is the Ethereum-based trading protocol Lighter. Of course, big competitor to Hyperliquid. Investors from the Founders Fund and Ribbit Capital led the fundraising with participation from Hound Ventures and Robinhood. The funding values the firm at around 1.5 bill. It is its own L2 as well, right? The protocol uses its own layer 2 infrastructure to minimize gas fees, enable instant settlements, and provide auditable proof of every trade. And the reason why they're going for this market is, I guess everyone's seen how successful Hyperliquid has been doing what they've done, and specifically because they've seen the potential TAM of perpetuals. So perpetuals are clearly the way that people want to gamble or to increase their leverage on trades moving forward. And so, I think there is space for more than one in the market. I think Hyperliquid is by far and away the favorite decentralized platform to do this. But surely there's gonna be some more that do well, and Lighter is this one. $68 million round, funding round at a 1.5 bill FDV. Question for you guys. I think that's the context that we need to know, and I think the numbers suggest that this is a good area to be participating in at the moment. If you're one of the better platforms, the numbers are up and to the right in terms of perp usage. What do we think? Well, I mean, one of the main reasons that Hyperliquid has been so successful is the immaculate conception, and by that I mean dropped to users only, and no VCs as part of that deal. I believe that there are VCs and bigger funds that have accumulated positions, but they weren't involved at the start, and that has always given people the confidence, I think, to think, well, we can buy this token. No one is going to sell on top of our heads in 6 months, 12 months, 18 months, whenever the lockup period finishes. Ironically, there is a bit of concern around Hyperliquid now, where the founders are going to unlock some tokens, and people are kind of debating how much are they going to sell? Are they going to sell any at all? That's, I guess, a separate but related question. But what do we think of Lighter here, guys? At 1.5 bill FDV, sounds cheap to me. Or sounds like a good value for the investors, but they are investors. And then what does that mean for other participants who have seen Hyperliquid do well, but a lot of that success was down to there being no VCs, along with an excellent product? Maybe coming to Ledge first, and then want to hear from Brad.
I think if I make the comparison basically from the DEX side, so how DEX tokens did, and basically Hyperliquid being the first one to, not the first perp out there, but the first one to be really successful and see adoption, that would probably be Uniswap. And Uniswap is still trading at 5 bill, whereas SushiSwap was earlier to do an airdrop, earlier to distribute a token to holders, but Sushi simply did not see the same amount of relevance and is trading at 150 mil. And now you have a landscape where you have multiple DEXs which trade above a bill. And similarly, I would argue that we'll see a picture where we'll have multiple perp DEXs that are doing well, that will have tokens trading in the billions, but it's going to be hard to catch up to the dominating player. It's going to be hard to catch up to Hyperliquid for all the reasons, from community distribution and simply to the user numbers and distribution and mindshare that they have in the market already.
Okay. What do you think, Brad?
So I'm more on the tech side. So one, I don't really care about the VC stuff. I think this is just signal. I think people are fine with it, whatever. It's good to see valuation. People are already putting dollars on their points. Cool. I think if we're talking forward-looking guidance and what this application has to do versus what Hyperliquid is capable of doing, the thing that is notable for me is like one, so Lighter is a ZK rollup on top of Ethereum. So it is able to have its throughput because it does ZK proofs, or validity proofs is what they're called. So it doesn't actually have the constraints that Ethereum has on most of the other rollups like Base and whatever. That's why you see it pumping out like 4,000 TPS. Now it doesn't have all of the same technical properties as Base or any of these other chains that do their DA posting elsewhere because you trust math with it. But that's all nerd shit. The thing that is notable and actually has some confluence with what Hyperliquid's recent proposals were. I don't know if you guys saw the drama about BLP is what it was called, where they're actually showcasing loans in Hypercore, and
Yes,
people were
I
going
saw
after
that.
Felix and a few of the others, right? So the thing that Lighter has going for it, because it uses ZK, you can do some funny math business, and because it's tied to Ethereum where it settles, you can begin to do things like have an Aave position with your liquidity on Ethereum mainnet and utilize that or have awareness of that and composability into Lighter because it settles to it. So there's awareness there between all these things. So then you can foresee a future where Lighter, because it has access to the liquidity hub that is Ethereum and the access to an Aave and all these other things, so these very mature products, you can then begin having like margin based on a delta neutral strategy or a loan that you've taken place or a margin that's accrued on some of these very large, very established, very secure Ethereum L1 positions. So like then you start to see of that future world that everyone has tried to talk about with Ethereum, where it's like, oh, okay, well, you have an app rollup that is existing in its own thing, which is what Lighter is, but it has access and awareness of all of the things that are on Ethereum mainnet, which is maximally decentralized, all this stuff. It is very, very close to what they're trying to do with Hyper EVM and Hyperliquid, and having these two things next to each other that kind of compose with each other. It's just one is infinitely bigger and infinitely more secure and infinitely more whatever. So you're starting to see a convergence of the narrative with these two and almost a race to deliver this same thing for both. It's very interesting to me, and I honestly would give the edge to a Lighter in this instance based on what they're currently doing with the ZK and what they plan to do, and just like the maturity of the Ethereum ecosystem. So that's what's interesting to me.
Interesting. Okay.
Plus the
Very
distribution. If these guys they're tapping into fucking Vlad Tenev because they're homies from high school or whatever the connection is with the founder of Lighter. Yeah. It's like if they have that kind of distribution, it's pretty tough.
I take that point. It's certainly not to diminish, right? I know crypto native people love Hyperliquid because Jeff made them all a lot of money, either just from the points program or from buying it spot and then just seeing it go up a lot. But yeah, certainly not something to diminish and to take seriously. A, because of what they've built, and B, some of those additional connections that you're aware of, right? And that you've just articulated with some pretty significant people, obviously to attract funds from Founders Fund and Robinhood, I think is significant. Okay, something to monitor for us for sure. We have used Lighter a bit. I don't think we've used it extensively, but we'll keep an eye. Brad, we're coming towards the end of the show, but definitely want to touch in with you for the final headline on Softbank's Nvidia position, which they have got rid of, and just maybe a general reflection then on the AI bubble, AI stocks in general. I know you said 60% of your portfolio is in stocks. So like how are you feeling when you see news like this? What do we need to know?
So, I'm actually going to update that number. I said 60%. I don't know if that's actually true because some of my meme coin bags are running real good. And it's getting lopsided. But so the headline for this was Softbank sells its entire Nvidia stake for $5.8 billion. Shit, my thing was lagging. So Softbank, obviously it's a big Japanese investing firm, whatever, by Masayoshi-san. This move actually reflects a shift in focus to OpenAI, which I found out that they already had some ties in OpenAI. They still have some funds that they invest in that still have positions in Nvidia or utilize Nvidia. So it's not like a total divestment, but their specific position was to rotate into other things. The thing that was interesting for me in the article was this little section. It said in February, SoftBank's chairman Masayoshi Son joined President Donald Trump, Sam Altman of OpenAI, and Larry Ellison of Oracle in opening a major investment of up to $500 billion in a project to develop artificial intelligence called Stargate. I had not seen Stargate anywhere on my feed. Like maybe just like it just missed me, but that was the most interesting thing for me. Have you guys had experience with Stargate? Have played with it at all, or?
No, is this a real thing that exists already, or?
I didn't have time to research it, but that's the thing, the snippet that jumped out at me, this whole thing. Cause like, yeah, they're selling Nvidia. I don't think Nvidia's topped. It's still doing good. I think it's smart for them to take some profits and rotate into other things. They obviously have some connections with a few other people in the industry. They're bullish on AI because they're rolling it into OpenAI specifically. But this Stargate thing was interesting for me.
Okay. So a quick commentary there. One, the only reason I can think, and this might be hyper skeptical, maybe this just is a little bit of an understanding of, in fact, I don't know if this is right or not, but I'll just say it. Is there any chance that the only reason you'd get rid of all of your liquid Nvidia stock is OpenAI is private at the moment, right? Maybe they're doing another round, but the goal, from what I understood, was to IPO at $1 trillion. So, you know, if SoftBank is doubling down on OpenAI now, they're not buying it at $1 trillion on the IPO day, are they? They're just coming in at what, maybe there's an additional round in order to then sell it as soon as it comes after. So maybe it could be one of those like hyper short-term trades where it's like, look, you're going to let us get into whatever final round you do before this $1 trillion IPO exit sale. Otherwise, I can't see why you'd want to necessarily get rid of your Nvidia thing. Maybe that's a bit of a skeptical way to look at it. Ledge, do you think there's any validity to that idea, or this is just what I look in on what Stargate is?
Yeah, this is what I actually did looking into Stargate. So what Stargate is, AP News is not describing it perfectly in an accurate way. It's a public-private fund that will plan to invest $500 billion over the next 4 years into AI infrastructure, data centers, etc., creating 100K jobs in the US alone. And obviously, US government being involved, OpenAI, SoftBank, Nvidia, Oracle, Microsoft, and ARM as technology partners. So it's more of an infrastructure investment fund than a dedicated AI itself.
Okay. Yeah, they made it read like it was a model. So like this makes more sense.
Interestingly, though, the building of the project has already started, and the project goes back to 2024. This is from another AP article setting the context. So yeah, it seems to be very, very focused on building out data centers. Okay, interesting. Something to think about. Brett, final question. How are you feeling with the stocks? Majority of your portfolio there, everything's super high. I suspect you're not like a seller through dips and things like that, but do you feel the stock market is healthy from that perspective? You giving it much attention or thought? What do you think?
Yeah, honestly, I haven't given it much attention or thought between managing my daily portfolio. Now that I'm back on my trader arc, since I have positions to deal with, and dealing with just like bringing Mega ETH to market, just letting it cook. Although I do get the semi-daily updates that my hype D position is getting murked. So like that's cool. But everything else is doing good seemingly.
The DATs. What a wonderful story the DATs will be when we pass those positions on. Okay, good stuff, guys. Great show as usual. Just a reminder to the audience, videos every single day, Monday to Friday, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify podcasts as well. Thank you to my co-hosts, Legendary and Bread. Thank you so much for joining us. We'll be back same time, same place tomorrow. Have a wonderful day. Take care, and we'll see you tomorrow. Bye-bye.